This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Daniel O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute at K-State, start today's show with a look at the domestic and international grain markets following the crop production and WASDE reports. In the first segment, Daniel and Guy discuss corn, grain sorghum, and freight. They also keep the show rolling as Daniel and Guy look at soybeans, wheat, and the U.S. dollar. K-State meteorologist Chip Redmond ends today's show as he explains our expected warming up and drying out and what impact where the high pressure decides to go will have. That and more is coming up. You're tuned in to Agriculture Today, and we start our Friday show with a grain market outlook from K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, Guy, thank you both so much for taking the time to join us today.
Thank you very much, Shelby.
As we're looking at the markets today, starting off with corn, looking internationally and domestically. And Dan, what are we seeing domestically?
Well, of course, we followed the report that was released by the USDA for crop production and World Ag Supply Demand estimates on Tuesday the 12th. And it's a report that lays the foundation for domestic grain markets really for the rest of the calendar year. And we'll be reacting to these numbers on a month-by-month basis from in the September report, September, October, November, and then after skipping a month, we'll still have a WASDE report, but the final production numbers will come out in January. And if you look at changes that happened coming out of this report, there were two things. I think that what caught the headlines were the changes in yield. And again, that number was 188.8 bushels per acre, had been estimated to be in the July report, a trendline yield at 181 bushels an acre, so up 7.8 bushels. So that in itself would have brought about quite a bit of change. But also kind of underlying that yield headline is that there was a sharp increase of about, over 2 million acres in corn planted, estimated in this report, up to 97.254 million acres. Harvested acres up about 1.92 million acres, up to 88.690. So the combination of those two things together brought about an increase of basically a billion bushels in U.S. corn production, up to 16.742 billion bushels, up from about 15.7 there in July. The rest of the balance sheet, actually quite a bit of change in essence, because with that large supply number and generally lower prices, by the way, and with USDA lowered their price forecast from $4.20 for this 25-26 market year starting September 1, just around the corner. They lowered that from $4.20 coming out in July now to below $4, down to $3.90. And with that, a lot of changes. Most of them, almost all of them, spurred on by the idea of lower. We'll have a buyer's market for corn with these large supplies. So you're looking at feed residual use up 250 million bushels. Wet corn milling up 95 million bushels, total exports up 200 million bushels. So and total use up now to for U.S. corn up to just under 16 billion bushels. So a sea change literally in the domestic supply-demand balance mode. I would say overall that we want to keep in mind that this is still the August number. It's based on what farmers anticipate they'll have out in the field. The USDA itself will not get out into the field and start measuring things until around September 1st. By that time, we'll have that much more information beyond August 1st, and we'll see if there's any change in sentiment once we get there. I wouldn't be surprised. This could be towards the high side of yields for this year. We'll see as we get out and deal with the windstorms and rust and whatever else is being talked about. But anyway, this set a strong mark, by far record corn production in the U.S. and then set the stage for however the international markets for corn might view things. So, Guy, I guess I'd throw it over to you for the international side.
just a couple comments on the domestic side. I mean, the trade was expecting a larger corn production crop, but that number the USDA came out with, that was the biggest single month increase since 1988. And just the quantum of that number is what really surprised that market. And it's weighing across the whole commodity complex on that. So quite a change. The other thing was the significant jump we saw in the ending stocks to use ratio from 10.8 last month to 13.3 this month for U.S. ending stocks of corn. And that's just all very, very bearish. Hence, wearing my Chicago Bears hat today when we're talking about corn and wheat. On the global situation, again, just to emphasize, we're looking at a record corn production globally, 1,289,000,000 metric tons of corn, which is a fairly significant new record. The corn situation, I was hoping to be a bit tight, but look, we've had good weather all over the world, not just in the U.S., to bring that corn number up. Before we go to export, just to comment on feeding, it looks like we're seeing less wheat being fed in a number of markets around the world, particularly China. I think they're going to consume more of that wheat that they produce domestically rather than put it into the feed ration.
And that's for corn, right? You're looking at corn or wheat there, Guy?
Corn.
Okay.
They're going to feed less wheat, consume more corn. Looking at major import forecasts, China imports, corn imports, that said, for this past year were reduced 1 to 4 million metric tons. And we'll looking at about 10 million metric tons for this coming year, which I think is maybe a bit optimistic. Other importers for the new crop, Egypt up 1 million metric tons, EU up 1.5. The Southeast Asia up slightly, just 100,000 tons, while Canada's been reduced 200,000 metric tons. So not too much changes in that export, and I think the exports we're seeing there for U.S. exports are fairly achievable from what the USDA showing, and I would be maybe a bit more optimistic on our export program for the coming marketing year.
I would add in on the corn balance sheet, that we are now projecting a record high U.S. corn export figure of 2.875 billion bushels and over 2.11 billion bushels in ending stock. So we're over 2 billion bushels with this. I guess I would say overall, we just want to remember that there's kind of a pattern in the grain markets when we're focused on supplies that we tend to see price lows. It tends to be put in any more in August or September, and after that, I guess the uncertainty about production tends to go away. Then we start looking at usage, and we'll see where things go after that.
One thing I'll bring to the table is the old adage: big crops get bigger, and so far we're seeing this year's crop make significant optimistic changes, and I would tend to expect that to maybe follow through for the rest of the marketing year. So we'll see in the next 30 to 60 days when they get out in the field what that crop's actually coming off as.
Yeah, let's see.
What are we seeing for grain sorghum domestically?
There was a change in the grain sorghum acreage also, in that in July there was a forecast of 6.2 million acres of sorghum and ended up at 6.6 here in the August report. And harvested acres, so that's up about 400, little over 400,000 acres, about 340,000 acres more harvested. The yield slightly higher, but the overall production number up about 25 million bushels, up to 391. It's noteworthy that there was no change made in the exports for grain sorghum, and of course that's a little bit of a political football given U.S.-China trade negotiations going on, et cetera. So we'll see. So although the exports didn't change in this report, I'd be curious to see what the prospects for exports would be in future reports when we have more surety with regard to U.S. and China.
On that export number, Dan, USDA's got it in there at 5.4 million metric tons. That's over twice what it was this past marketing year.
I'm talking about a U.S. grain sorghum, Guy.
Oh, yeah, grain sorghum. Sorry, yeah.
U.S. grain sorghum, 225 million bushels.
Yeah, I'm talking metric tons. So it's unchanged for the month. The biggest difference in that export matrix will be a lot of that sorghum's now going to Mexico. It's not pricing into China. So a big
Yeah.
change in
Yep.
that trade flow, and it's competing into a number of extra markets now rather than to China. So we've seen to made a shift in the trade flows a bit. It would be nice to see that China situation get settled and in such a way that would make U.S. commodities competitive again back in there.
We'll have to see. There's a lot of geopolitical things going on.
Just a few.
As we round out our first segment, Guy, what are we seeing for freight?
Freight market situation is we're seeing a little firmer on global freight markets. The dry bulk index is up this past week to about an 18-month high at just above $2,000. No, not a huge rally, but it's good to see a bit of strength in there. I think most of that is actually being driven by the demand for coal and iron ore, particularly at the moment, which is sort of indicating maybe a bit of a recovery in China and Southeast Asia's economies. That's the big driver of that dry bulk freight market. As those freight rates do go higher, though, it does make the U.S. a little less competitive where we're freight disadvantaged, particularly into those markets in Southeast Asia and some other places, as we got to compete, particularly with Australia on the wheat situation and into Brazil for some markets there as well. So we're seeing some firmness there, which I think that's a good leading indicator of better economic strength coming globally.
That was the senior economist at the IGP Institute at K-State, Guy Allen, and he was joined by K-State grain economist Daniel O'Brien. We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Guy and Daniel as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our show and conversation with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, Guy, as we continue talking about the grain market, picking up with soybeans, and what are we seeing domestically?
You know, the results of the WASDE report were responded to really pretty positively, quite positively, at least initially, by the trade. You'd seen a pretty strong jump in prices. Now, it looked, as we see after that report, some retracement of all that strength. But anyway, you did see some increase in the U.S. projected yield, up about 1.1 bushels per acre to 53.6. But then the area planted, actually, whereas corn had gone up about 2 billion bushels, soybeans actually fell down to 80.925 million acres, just about 2.5 million acres lower. And harvested acres projected now at 80.104 million acres, and that'd be down about 2.43 million acres. So, I think we've seen this before, and where we've ended up and had projections of U.S. corn end up and be raised higher, and soybean projections dropped substantially by the time you get out here into July, August, September. So started to be a repetitive pattern. So with that, we did see, I guess, in combination with a little stronger usage in the current marketing year that we're in till August 31st, had seen ending stocks that year down to 330 million, brought that into the new crop year, lower beginning stocks. The production number down to about 43 million bushels, down to 4.292 billion. So you have a lower supply overall and a reduction in projected exports based on buying patterns of late, et cetera, and expectations of the USDA, down 40 million bushels, down to 1.705 billion bushels. So total use with some other minor adjustments, total use down about 43 million bushels, ending stocks down about 20, down to 209 million, price unchanged at $10.10. So stocks to use lower down to 6.7% stocks to use here in the U.S. So going to be interesting to watch, in terms of the different moves and where things are going on. We've been trying to watch closely the balance sheets for soybean oil and soybean meal, just a minor change in old crop soybean oil supply demand balance sheet, a little bit higher beginning stocks. So I think the number to watch for both these commodities, whose whose marketing year will end up in October 1st instead of September 1st. We'll see how their export figures work themselves out. We had been having pretty strong soybean oil exports for a number of reasons. A guy could talk to that. And exports actually for soybean meal were actually raised some. So we'll see where all that goes. Guy, you want to take the international side?
Yeah, internationally, even though the U.S. Numbers were a bit bullish and supportive of the market, global numbers were pretty much unchanged this month. Argentine soybean imports were up slightly, 300,000 metric tons. No change in other competitor bids around the world for old crop. Chinese imports, the soybeans unchanged at 106 million metric tons and crushing 103. 25, 26, a little higher next year at 112 million metric tons for crush and 108. I think that's a bit optimistic. I think we're starting to see China reach peak soybean demand, particularly when we look back the last 25 years. World exports of soybeans declined 1.2 million metric tons to just under 125, a little bit less than this current year. That's for global trade. And what we're seeing is ending stocks unchanged. We're sort of been both sides of 125 million metric tons on the international situation. Not a lot of changes on that. But keep in mind, we are working off a record world production of soybeans of 426 million metric tons. And that's up 2.5 million metric tons from last year. So supplies are a little bit looser, but we're seeing pretty steady demand in trade there.
Daniel, what are we seeing for wheat?
You'd seen the wheat supply demand balance sheet end up and have minor changes, but the ending stocks figure for the current marketing year that ran started June 1st, down 21 million bushels, down to 869. Stocks to use figure was in July 44.3% stocks to use, now down to about 42.8. So a little bit tighter. Really not any other major changes. The acreage figures were shaved down a little bit lower. The yield figure up just a hair higher. If there's one number that does stand out, it would be the domestic projection of U.S. exports for wheat, up 25 million, up to 875. And most of that's hard red winter. Still interesting to see the domestic U.S. hard red winter balance sheet show strong exports. And here, I guess I was surprised to see the jump that we'd seen last in the July report from 210 up to 275, and now they've taken that number another 25 million bushels higher, up to 300 million bushels. So in the old crop marketing year for hard red winter wheat, we were at basically 61% stocks to use. Now we're down to 55% stocks to use. And, buyer's market, low price wheat, and we've seen that here in Kansas, one or two prices peaking a little bit cash-wise above $5, most of them below that, and pretty good buys. And that supplemented with a little bit more attractive U.S. dollar, at least it had been the case, has helped us to be that much more of a strong competitor in the world export market for wheat. So there was one change also in the projected price for wheat that basically took a dime off it down to $5.30. But the reason they stated that issue, that they made the change, had to do with more with the corn situation, where there's going to be abundant corn available and kind of a cross-market effect, we'd call it, that just not as much buying pressure for any wheat feeding here in the U.S. because of the abundance of feed grains that are likely to be around. Guy on the international side.
Yeah, looking at the world situation, USDA shaved just 1.6 million metric tons off the record world wheat production. It's now down to just under 807 million metric tons. That's up about 1% from a year ago, but we are looking at a record world production of wheat. Russian production steady at 83.5 million metric tons, exports steady at 46. Ukraine production at 22, exports steady at 15.5. European looking at production of 138 million metric tons. That was up 1 million metric tons. Exports at 32.5 million metric tons. Our friends to the north up in Canada, their numbers were also unchanged, 35 million metric tons, with exports steady at 27. Australia got a bit of rain there in July. Crops looking a bit better there.
It does rain periodically in Australia?
It does once in a while.
Oh, I was just curious.
They're always needing a drink down there. Australia is steady at 31 million metric tons versus 34 last year. So their exports are down to 23 versus 25 million metric tons last year. Interesting one in China, their production of 140, which is off 2 million metric tons from July. Imports, though, still unchanged at 6 million metric tons compared with 4.2 last year. I think that's sort of doable. They've had a bit of rain, and I think there's some quality issues there in China. That's why I was a bit surprised they reduced the wheat feeding on that particular China numbers. World ending stocks are expected to be at 260 million metric tons. That gives us a stocks to use 32.1 versus 32.5 last year, tightening up slightly, but look, 32% stocks to use is a pretty comfortable balance sheet.
Obviously, there's enough wheat around in the markets for the world to feel pretty comfortable. But 2 years ago, 33.9% stocks to use, 33.6 last year, projected 32.1 this year. And again, nobody feels crowded when you look at the world minus China. 2 years ago, 21.1, 20.5 last year, now 20.45. So must be something going on with either the storage or the efficiency of handling for wheat that we're tolerating tighter supplies without being stressed in terms of being worried about supplies being available. And generally for wheat, world tends to not be as tolerant of really, really tight wheat supplies as they are as some of these other crops. I think it's because wheat is so important in terms of milling and bread production and human consumption. Any thoughts on that, Guy?
No, that's exactly right on that. Wheat and rice as well being both food grains. People get a bit nervous when those supplies tend to tighten up a bit. Might switch a bit to currency on that. Currency's been lending a bit of support to the market. Over the last month, we've seen currency stabilized about 98.25 on the dollar index. Keep in mind, 1st of January, start of the year, we were up around 110 on that index. So it's come down over 10%, which should be lending some support to commodities in an otherwise bearish situation. When I look at both wheat and corn, we're currently at 5-year lows on those commodity prices. Soybeans have seen a little bounce off of that. My other concern is we have current commodity prices below that cost of production looking at next year. And I think it's a good opportunity for end users and consumers to step up. So it makes me a bit optimistic on demand. And I think with the lower U.S. dollar, it makes our values a lot more competitive in the rest of the world. So I think we're starting to see that reflected in some of the export program.
Guy, Daniel, I appreciate you both taking the time to join us today.
Thank you, Shelby. Appreciate it.
Thanks, Shelby.
That was a senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Daniel O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, we've seen a lot of different weather, and what has that been?
Yeah, we've gone from really, really hot temperatures to end the week. Last week, we had temperatures statewide averaging over 100. We reached up to 112 out in western Kansas. Super, super warm, and thankfully, we weren't 112 across the whole region. It was just that one station. So that didn't break a lot of records, where record temperatures are in that 115 range or so for a lot of places in the state, but a lot of warmth that day. And we're starting to see average temperatures fall as we're on the back end here of summer. And so when we get that warm and get over 100, it's not uncommon, but we start to see it occur less and less frequently in history. And so we just are warmer than normal on Friday. And then we had a storm system go to our north on Saturday, a big weather maker for Nebraska, a significant wind event. And that started to edge south, and we saw that impact portions of northern Kansas on Sunday morning, and then even further south in southern Kansas on Monday morning. And so we saw severe weather as a result of that storm complex that kind of drifted south gradually with multiple different rounds of storms. Highest wind gusts we saw were in the 80-mile-an-hour range around Bunker Hill. Then we had some more 60s and 70s reported west of Wichita. and a lot of severe thunderstorm warnings, but not a lot of reports, thankfully. And we saw some heavy rain as a result of these complexes of storms, where some areas received 2, 3, even 4 inches in localized places of rainfall over that, 24, 48-hour period, which was needed in places, especially folks in the Northeast and Southwest needed some of that precipitation. Other folks, South Central, they're kind of starting to dry out finally, and yet they got another shot of rain. So as we move forward, our average rainfall is decreasing on a weekly basis. Most part, everyone saw rain at or near average around that 1 inch mark to 3/4 of an inch out west. There were some pockets though in far southwest that around Hamilton, Stanton counties that missed out on those heavier rains, and even in Finney County as well, with less than 1/10 of an inch of precipitation. So there's still some folks that need rain, but overall more widespread than we thought thunderstorms would be. And that was the cool period though. And Monday was very cool, overcast for much of the state. Temperatures running about almost 10 degrees below average for Monday. But then since then, we've been gradually increasing temperatures across the state. It's been very gradual, where our overnight lows have been creeping up more than our afternoon highs. We still have some residual moisture, but now things are starting to dry out. We're starting to see the breeze pick up, and we're seeing clearer skies, and that's starting to dry out that remnant moisture that we saw at the surface. And temperatures are back to normal as of midweek, and probably going to continue to climb into the weekend and get to above normal.
Chip, what do we see for our forecast?
Yeah, so it's all going to depend on where this new high pressure system is going to develop. Right now, it's kind of over us. It's going to shift off to the east a couple of days this weekend. That's going to allow for some increased heat and temperatures approaching 100 degrees this weekend. Then we'll have another system move around on the outer periphery, western edge of that should impact far northeast Kansas. I think is the best chance, but a slight shot at some moisture from that weak thunderstorm complex that's probably going to develop. But then that high pressure tries to shift back westward by the middle of next week, which would imply that while we do get a brief period early next week of cooler temperatures, it's possible we warm back up and stay warm by mid to late next week as well. This high pressure is going to be a big, impactful factor for a lot of people besides us. We're just going to drive the hurricane that's currently in the Atlantic, and we'll decide how far west and if that hurricane potentially has U.S. impacts. But big weather is occurring in a lot of parts of the U.S. right now, but thankfully, pretty quiet week overall for Kansas expected.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.